So when we talk about access to capital, I think most of the clients, they immediately think about banks as the only option. But in fact, there are many opportunities and options here. We're just gonna mention some of them in this presentation, but feel free when we share this presentation with everybody to Google it and to understand a little bit more about what is those organizations do. So we have options for crowdsourcing or crowdfunding. We can also find angel investors. We can also find equity crowdfunding, or we have banks and alternative lenders like us. Again, CDFIs. We look at things a little bit differently, again, because we have a mission, and the mission is to support the clients. Thanks. So what makes Accessity different? I don't know how many of you in this presentation are maybe thinking about starting up a business, maybe in that process already, and they face, or you are facing the problem of finding money because nobody then you believe in your dream as much as you are. So what happened is we really look at things differently when we say we help startup businesses, because pre-revenue, it's an opportunity for us to help the business owner. The purpose of it is to give you this push to start the business, but it's very important here that the business owner or the person who wants to start the business have a secondary source of income. And I'm just gonna say this, imagine the risk that is involved in creating a new business, right? And start a new business. If you don't have the capacity to support the payments for this loan that we're gonna be offering, that would be very irresponsible on our side if we don't take that in consideration. So what happened is many people, they quit their jobs, they want to start the business, but they don't have capacity for repayment. So it's very important that you keep that in mind while we talk about these opportunities. We also help existing businesses. When they have less than 2 years in business, sometimes the banks, they don't feel comfortable because they want to see the business succeed. They want to see that they can be sustainable, especially financially, and we can help this type of businesses as well. So in this process of growing and transition from a startup to growing in less than 2 businesses, we help them as well. We help them when they change entities. For example, sometimes we start as a sole proprietorship, but an opportunity to create an LLC comes because it's the best way to do it, or even a corporation. In that transition, we can help as well, because banks sometimes think as a startup business when they change entities. We don't see things that way. So we can consider the experience, the time in business, and we can work with that. Some other opportunities that we have here is when the client doesn't have sufficient credit history, or they have new credit, or they have an IT number. We can also help in that case. When I say new credit, it's people that don't have any FICO score. We can also work with those type of clients. We work with retails. No, I'm going to say this. We work with industries that are considered risky, and some other institutions probably don't want to look at it because of the risk involved. And one of those are transportation, food and beverage, and also retail. When a client has also low credit score or past challenges with the credit, we try to see things also a little bit differently. So we work with FICO score as minimum as 550, but that doesn't mean that it's only a FICO driven opportunity. We look at the behavior. So we don't want to see in the last year, like late payments, we want to see at least those accounts to be current. Okay, but it's important that we have more flexibility in terms of FICO score or credit. So important, the purpose of the loan. So we can do from business acquisition. Yes, we can help you to buy a business if you want. Remember, we have a limit of 150,000. We can help for expansion, to buy equipment, to hire employees, inventory, marketing, tenant improvements, and that is pretty much considered like a working capital. And when we offer this, we look also at the financials. We look at the 6 months of revenue financials. And when it's a startup business, we like to see projections as well. So I'm going to try to make it very simple. We help startup businesses, don't quit your job, basically. Show us that you have capacity for repayment. And if you are in the process of building or growing or expanding your business, has very clear purpose of what you want to do with the money. But that's what we're here for. That's what the business development officers do. We help the clients to understand the needs sometimes and make that proposal appealing for the people behind the scene, which is the underwriters, to understand your idea as well as you do. Okay? This is something that I don't want to take a lot of time, but I think probably the majority of the people in this presentation hear the word or see the word global or global cash flow. What is that means is very important. The global cash flow basically is your capacity to repay the loan. And this is another thing that we like to see things differently. I just want you to focus on the green highlights here. As you see, monthly business revenue is the money that is coming into the business. Monthly business expenses is the money going out. And that difference is going to tell us not only what is the profit that you have at the end, but it's also the cash flow ratio, which means that little number on the bottom, which is 1.22, means that the business is making $1.22 per $1 that they spend in the business. If I say that is $1.22 means $1.22, it's making more money than what it is spending, means they have the capacity to repay the loan. This is usually how banks look at the cash flow. But we at Accessity, we look at the global cash flow. We take in consideration the personal income plus the business income, but we also take in consideration the monthly expenses and the obligations that is going to be showing on the credit report. Okay, I'm going to just make a quick pause here because this is going to be shared with you guys, but I want to understand that the main point of this analysis is not only the numbers, is to help the client to understand if they really are in this capacity to repay a loan. Why I'm saying this is because many times we have clients, they think the solution is to find money. But in fact, the solution is not. Maybe the loan is going to put them in a different situation, a stressful situation. So when we talk about cash flow, we look at opportunities to make it work, obviously, but in a very responsible way. And also, it's important to consider the net profit. It's the money that you have at the end of the operations. We want to see that money available every month. And that's why it's important to have that business account where we can see the money coming in, money coming out, and what the balance is at the end of each month. So again, if you have questions about this specifically, if you want to do an exercise, write your questions. We're going to try to answer all the questions at the end, but it's important to understand that it's part of the financial responsibility that we have, not to just give you the money, but to make you understand what is the responsibility involved in getting that money, okay? This is the most common mistakes that borrowers make when they're applying for loan. And this is based on real statistics. So number one, and this is very important, the lack of preparation. Every time that you apply for a loan, even either with us, with financial institution, you need to prove, right, what type of business you have. You need to prove your financial situation. You need to provide information about your statement. So submitting the documents promptly is the success of this process, basically. So borrowing before speaking to the experts. Many times when we have these conversations with the client, I notice they don't even understand or they don't have the clarity to know what they need the money for. When we have this interview, our goal is to help the clients to understand how they can justify the money. Because sometimes when they say, I need to invest the money in marketing, we need to help them to be very specific, because that's what the underwriters are going to look for. And we are part of that process. Spending the funds without final approval. That's very important. So you don't use the money that you don't have in hand, right? I think that's pretty simple. When you are looking for a lease, signing a lease contract before receiving the funds, that's a big no-no, because many things can happen actually. And it's not responsible to do it before you get the funds in your bank account. And by the way, we need the client to have a business bank account. Even though they're in the startup process, they need to have a business bank account. Refinancing your home, it's a transaction that is going to be reflected on your personal credit, and everything that has a financial impact, it's also going to impact this business loan application. Applying for new credit, this is for everything. When you apply many times for credit, it's going to be that's going to be reflected on your credit report. Not only we see who is applying or who you're applying with, but how many times, and also can affect your FICO score. Quitting or changing jobs before to apply for a loan with us or during the process is not a good practice. Again, because we're looking to show what is the capacity for repayment. Commingling, having personal accounts mixed with the business expenses is not a good practice. Keeping cash undeposited, like a mattress money. And I want to be very, I'm going to emphasize on this a lot. In my own experience, when we want to apply for a loan, business loan, it's because we believe in the potential that our business has to grow, to make more money, profitable, hire employees. But if we don't show that the money is, or the business is profitable, how are we going to trust that process? So sometimes we need to make those decisions. Many reasons why you don't want to put the money in the bank. I don't want to go into those details, but it's part of those business decisions that you have to make sometimes. If you want to keep growing your business, you have to show the money. Say next. And quickly, I'm going to just give you some updates about we offer loans up to 150,000, but I want to tell you that we have different buckets from $300 to $25,000. It's probably the easy access to capital available. The rates are 8.99 up to 14.99%. It's a loan, it's fixed rate, fixed term, and we don't have pre-penalties if you want to pay it before. The terms go from 12 to 48 months, and the closing cost is 6% of the loan amount. But from start to finish, you don't have to pay anything up front. And when we check your credit, it's going to be a soft credit pull. This is very important. We're not going to affect the FICO score. Okay? You can move to the next one. So what type of documents we need? So we already talked a little bit, but let's just be more specific. We need the EID, obviously. We need the proof of entity. Whatever you have, if it's a sole proprietorship, we need the fictitious name statement. We need the LLC, the articles of the incorporation, because we need to identify also who are the owners. We need to look for the owner's information if they have more than 20% ownership in the business. And we also need the proof of income. And the 3 months bank statements are very important in this process, because that's how we see the money coming in, the money coming out. If the business is over 25,000, we're going to look at financials, balance sheet, profit and loss, and the last 2-year tax returns. If it's startup business, we look at the business plan and the projections for 1 year. And the breakdown of the use of funds is what I was telling at the beginning. You need to understand what you need the money for and how you're going to allocate that money, because we're going to ask for it. And the collateral, it depends. We need title and registration is applicable for over 25,000 loans, and the lease agreement or the letter of intent. If you don't have the place yet, but you want to apply because you identify that retail space that you really like, we can work with that letter of intent to lease the place. Okay. So we're going to share our link, Accessity. We have a very simple process to apply. Actually, the application takes 4 minutes. It's very simple. And we have coverage in the counties of Riverside, Inland Empire. Actually, I'm going to share with you our team in the next slide. We have BDOs. Joyce is in South and East County, North Inland in San Diego. We have Larissa, Juliet, Christine, Maria, and Francisco Carles, our manager. But my point is, we're trying to serve our communities. We're here for you. If you have any questions, we're going to share our contact information. But more than anything, I know this is a lonely journey sometimes. Having access to capital makes the difference, but we are here to support. That's why we have bank partners, and we also have SBDC. So thank you so much for today's presentation. And Christine, my colleague who is here in this call, she's going to help us at the end with some specific questions. She has a lot of experience with Accessity.
Yes, thank you so much, Maria. That was so helpful. Yes, and Christina is in the, if you want to send a chat to the panelists, she is in the chat answering your questions. I'll have one question for you, Maria, before we transition into Daniel's presentation. NJ asked, do you finance nonprofit businesses, 501c3s?
We don't, no.
No, we do not do nonprofits.
No.
And then could you explain a little bit, last question for you before we go to the next presentation, what is a CDFI?
It's Community Development Financial Institution, which means we are here to serve the community. And I'm going to put it in my own words. Imagine going to a financial institution when you're new, when you don't have enough financial information to show the financial institution, the bank, that you are solid. We are there to fill the gap. Why? Because we listen to the story, because we consider the cash flow in many ways, which consider the personal and the business, and because using projections in a business plan means we try to invest in business that are going to impact not only you, but the community as well. So mission driven, help the people that cannot find access to capital easily, but we do it in a responsible way as well.
Yes.
I hope I answered your question.
Yes, yeah, I think you did. Thank you so much, Maria. I think next, just because we have a tight agenda, we're gonna transition to Daniel Rodriguez from BMO. He's we talked about Accessity and CDFIs and kind of alternative lenders. Now we're gonna hear it from the bank's perspective on what lenders are really looking for from a bank and how you can build a strong financial profile to improve your chances for approval from the bank. So I will toss it to you, Daniel.
Awesome. Thank you, Suzanne. So first of all, good morning, everyone. So my name is Daniel Rodriguez. I am the VP Market Strategist for Southern California, overseeing 8 markets here in SoCal, so Central Valley, all the way down to San Diego. I've been in the banking industry for now a little over 18 years. So excited to be here with you all. And today I'm going to be talking about 2 different things. I'm going to be talking about the special purpose credit program I oversee, and then also how do banks evaluate your lending application. So with that, I'll share my screen with you all. All right, perfect. So we'll start here first. So as I mentioned, right, I oversee this program called Zero Barriers to Business. And it's a program designed to help businesses make real financial progress. We actually launched this program in November of 2020. So during the pandemic, we realized that a lot of newer businesses were starting up. And what happens when you start a business, right? You start leveraging your personal credit. So we wanted to make sure that we understood the needs of the community. Much like Accessity, yes, we're a financial institution, but we're also very mission driven, where we do very intentional about the programs that we support, and then also the help that we provide to our communities. So a little bit more about the Zero Barriers to Business program. So today we're empowering Asian, Black, Hispanic, Latino, LGBTQ plus, Native, veteran, and women-owned businesses. We realized that historically there was some financial barriers to these communities, and so we did a little bit of data analysis. And here's some information by the numbers here. So as you can see, a little under a third of small businesses in the United States are minority-owned, and growing at an alarming rate of 11% year over year, versus 1% growth for non-minority owned businesses. The challenge that we saw during the pandemic, when we started taking a look at how do we create a program such as this, is we noticed that a little under half of minority owned businesses reported difficulty obtaining credit versus a third of non-minority owned businesses, right? So we said, hey, how do we support our BIPOC communities and be able to help undersourced businesses as well? So just quick, this is a little bit of how we help expand the possibilities for small businesses. So our program is comprised of 3 pillars. Our first pillar is access to capital. So through our program, and here's a key word, if you self-identify as one or multiple of these segments, then you have better access to working capital with expanded credit criteria and competitive interest rates. So our interest rates today are anywhere from prime plus a spread of 0.2, so call it 7.7, all the way up to about 14.75, depending on your industry type, and then also your risk segments for based on credit. So to give you an idea, so we are initially, when we launched the program, we had 4 programs, which was the Black-owned businesses, Hispanic-owned businesses, Native and women-owned businesses. So if you self-identify as one of those 4 legacy programs, the minimum FICO to qualify for this program is 617. Which is pretty favorable for businesses that have challenges accessing capital. Typical bank lending credit scores that we look at is 660 and above. So this gives you a little bit more flexibility. And then with our newer segments, so the Asian, LGBTQ plus, and veteran-owned businesses, the minimum FICO for those is also 660. But we do offer competitive discounts if you set up auto payments. So the second pillar of the program is better access to education. So we want to ensure that businesses, whether they're just starting or are in the growing phase, we want to help you provide practical tools, webinars, and coaching, such as this. And so when we do assist clients through any one of our landing pages, and I can show you those resources at the end of this presentation, they have access to a lot of different cash flow templates, forecasting, things of that nature to really help a business sustain and grow. And then finally, my favorite pillar of our program is better access to partnerships. So we form partnerships with organizations to give you access to meaningful networks and alternative funding sources, right? So for our program and for any bank lending in general, businesses do have to be operational for at least 2 years to be able to qualify for any lending. So that's why we have partnerships with the SBDC, with Accessity. So if you don't meet a financial institution's guidelines or requirements to apply for a loan, we want to be able to refer you to those partners, such as Accessity. And then finally, here are just some more resources about our programs and themselves. So if you click on any one of these landing pages, it's going to take you to content specific designed to support the way you self-identify in your business there. And now we'll go to something I think that's very important for small businesses to understand is demystifying the lending process, right? How does a financial institution like BMO evaluate your application, and what are the factors that we look at? So this is how lending decisions are made from a financial institution perspective. So we do understand that every business needs capital in some form, right? And bank funding is one option that's available to you. We do understand that applying for a loan can be overwhelming, and so knowing what banks look for can ease that stress for you. So here, I'm sure if you may know this or you may not, so this might be a refresher or some new information for you. The way the banks look to make a credit decision is based on the 5 C's of credit. And before I get into each one of these separately, I do want to touch on one that I've kind of developed on my own, which is called communication. So the 6th C for me would be communication, right? And I think it's important to communicate with your lender, with the CDFI, what your expectations are, and then how we can support you. I know Maria did an amazing job of covering that piece about, hey, we need to understand what the funding is going to be used for and how we can help you support. And so the main 5 C's are here on the screen. So the first one is character, the second one is capacity, the third one is capital, the fourth one is collateral, and then finally conditions. And in the next slides here, I'll cover each one of them so you really understand how the banks are looking at these 5 C's of credit. So the first one is consider your credit score, right? So your credit score is going to reflect your character. So character for a bank like BMO is the likelihood of repaying a loan based on past behavior. So what does that look like? What are some factors that help determine the character for your lending application? So one of the major things we do see is, are you making your payments on time? Are you not borrowing excessively? One of the important things also is having a payment history with at least 2 active accounts. When I say 2 active accounts, that could be a car loan for the business, that could be working capital line, a business credit card. Is there any school loans, things of that sort? So we're going to look at those trade lines to make sure that you're active on at least 2 or more of them to be able to understand, hey, this person has great character and has managed their credit efficiently thus far. I think Maria covered this one as well. Not asking for credit too often, right? That's typically a red flag for a bank, which tells us, hey, this person's applying at different places to try to see who's going to be able to help them if they keep getting declined elsewhere. So we take a look at that. Are they asking for credit too often? A bigger thing now that the banks are actually looking at is avoiding medical and other collections. That's huge in our industry now. So what I would recommend is you do have access to a free credit report once a year. And that's offered through www.annualcreditreport.com. So this is a free report where you can take a look at your history of your credits. Now, before I move on, annual credit report does not give you your credit score. What it's doing, it's providing you a history of all the credit that you've established since you were able to. And then finally, paying suppliers on time, right? It's very important. You have suppliers that give you net 30, net 60. So that's important that the banks look as well. Are you keeping up with paying your suppliers and vendors? And then finally, paying utilities on time. This is a newer characteristic that we're looking at. Are you paying your water bill, light bill? Are you keeping the lights on in order to help grow your business? So we are taking a look at that and evaluating that. And then I think Maria touched on this, but this is the way the actual bank looks at it, right? The capacity. What is capacity? So capacity is the ability to repay the loan based on the debt service coverage ratio. So a little bit different than how Accessity looks at it. So as you can see here, it's a pretty simple formula that we look at, right? So we take a look at your personal income. So that could be wages, other income such as Social Security, alimony, child support, etc. We deduct your personal debt payments, and we deduct your personal taxes and living expenses, and then we add that with your business income. So net income, interest, taxes, depreciation, amortization, and we deduct your expenses. Now you say, Daniel, I want to apply for the $50,000 line of credit. So we combine those 2 incomes divided by the new business debt, and we get what's called the debt service coverage, which is expressed as a ratio similar to what Maria was referring to, right? From a bank perspective, the bank expects at least $1.25 in personal and business net income to every dollar of business debt service. So again, to kind of piggyback is when we look at it, as we like to see at least an extra 25 cents as a cushion to protect against economic downturns. So I'll touch a little bit more on that. What's an example of an economic downturn? Our third C, capital, right? I'm sure you guys have all heard the phrase, how much skin in the game do you have? So the more you can put in, the less risk of default, and the bank feels more comfortable lending you those funds that you need to help grow your business. So some examples of capital that the bank looks for is cash in the bank, right? How much is in the bank? Stocks, bonds, property, inventory, and equipment. And then those 3 final ones that are really tied to collateral, which I'll touch on briefly in a few moments here. So as you can see, this is an example, right? So suppose your business got a new contract to custom design phone covers. So your business would have to invest in the raw materials, plastic, and other things you need to manufacture the product. You generate an invoice and ship the materials. However, up to this point, you haven't received any payment. So you come and talk to BMO or another financial institution and say, hey, I need at least $100,000 to be able to fund this project. So in this case, you would need to be paid for by using business capital. So the bank would expect at least 20 to 40% of the total loan requested to come from the borrower. So typically we ask for 20%. I haven't seen 40 that often. But here's another thing that I want to touch on this slide that I wanted to cover as well when I talked about capacity. We do work with the SBA as well. So we are a preferred SBA lender. And so our ratio, instead of being 1.25 to every dollar you borrow, what we look at from an SBA backed loan is 1.15. So for every dollar you borrow, you at least have a dollar to pay back and the cushion of 15 cents. And then as I mentioned, right, those three bottom suggestions there for capital is collateral. So easy definition, an asset used to secure a loan. Typically, when you apply for lending for, let's say, a piece of equipment, the collateral will be the piece of equipment. So that's going to help the bank feel comfortable that, hey, if for whatever reason the sky falls, the business just is not making enough money, then the bank feels comfortable lending you those funds because we have the piece of equipment as a collateral. Another piece of collateral could be your home, right? Through the SBA does require that we put a lien on your home if you have more than 20% in equity in that home to help support the lending request. And then finally, conditions, right? This includes forces outside of our control. So circumstances that can affect your loan application. So I'll just give you a quick example here. One of the ones that we would look for, economic headwinds. The perfect example here is the pandemic, right? We saw that a lot of the businesses in the restaurant were struggling, right? Because they had to close their doors. They couldn't have folks come into the restaurant. So now, if you're a restaurant today, we're going to take a look at your financials, at least 3 years of tax returns, to see what that looked like during the pandemic. Did your business thrive? And it also helps us control seasonality, right? What are some of the things that affected your business? And then obviously political and regulatory changes. Has your business been affected by the tariffs, right? Things of that nature. So those are some of the things that we look at when it comes to evaluating conditions and to be able to feel comfortable with that loan. And then finally, again, here's just, again, some more resources. I think they were put in the chat. So annualcreditreport.com. Consumer efficacy is very important with all the fraud that's happening. So the Fair Trade Commission kind of gives you some guidelines there. And then finally, I touched a little bit on the SBA. So SBA.gov Business Guide covers who are the preferred lenders and then also what lending programs are available. So with that, I will turn it over back to you, Suzanne.
Yeah, we have a couple of questions before we go into the next presentation. There were a few questions about both these topics. Could you talk a little bit about if BMO does lines of credit and what you offer? And then do you work with the SBA, do SBA loans, and what do those interest rates look like?
Yeah, definitely. So to answer your first question, the product that I oversee, so the Zero Barriers to Business product is a line of credit. So it's a line of credit of up to $50,000. If a business is looking for more than $50,000, then we wouldn't use this program. We would just use our conventional lending guidelines. And our typical interest rates right now are roughly 7.75, all the way up to 14.75. So pretty competitive in the marketplace, similar to a lot of our partners as well.
And then the other question, was that the SBA loans, or did you talk a little bit about those?
Yeah. So now when it comes to the SBA, so I think there's a misconception, right? The SBA is not an actual lender. So what the SBA does is they help guarantee the loans from a financial institution, from a CDFI, things of that sort. So the bank is still the one that's giving you the loan. We're just having the SBA help us with that guarantee, saying, hey, if something happens to this loan, then the bank has some cushion with the SBA. So we are preferred lender of the SBA, but we are still doing the loan itself.
Okay, great. That's super helpful. And then could you talk a little bit about, is your credit score and the credit scores that you were referencing earlier in the presentation, is that based on your personal credit score or business credit score?
Yeah, so great question. So any loan that comes from a financial institution is always going to be personally guaranteed. So we are going to take a look at your personal credit score, but then also we take a look at a blended FICO score, which is the small business scoring service through FICO. And so if you have established credit already under your business, that's going to be reflected as a credit score of anywhere from 100 to 400. And the sweet spot for that blended FICO score is anywhere between 250 and 400. That's how the banks feel more comfortable assessing risk and allowing you to qualify for that loan.
Okay, perfect. Okay, we have some other questions that we'll save until the end because I really want to jump into Ted's presentation. He is from the LA Regional SBDC Network, and he's going to talk about an overview of free resources, how the SBDC can really be a great resource when you're looking for lending, and how they can help you prepare, and really finding the right fit for your business. So we're so excited to have you here. I'll turn it to you, Ted.
Thanks so much, Suzanne. Good morning, everybody. Thanks, Marie and Daniel. That was great info. You really teed it up for me. I definitely want to talk a little bit about some of the things you mentioned, but a couple key takeaways for me. I love the fact, Maria mentioned, taking on a loan is maybe not the best thing for your business, but I think a lot of times people think that's what I need, more money, more money. And I loved Daniel's sixth C of credit. Communication is always key. So that was a huge takeaway. Thanks for that info, guys. Let me share my screen here. Hopefully everybody can see that. So my name is Ted Hiatt. I've been with SBDC since 2010. I think what we offer is, we have a lot of folks that are just really passionate about small business. And we have folks that the majority of whom are small business owners themselves. So most of them do this work part-time just because they believe in the mission, and they believe in fostering a really strong small business community. And that's kind of what makes this whole nation tick, really. So we are certainly grateful for the funds we get from the state and the federal government. And so we're basically your federal taxpayer dollars at work. So what is the SBDC? That's one thing I think people oftentimes, get confused. They think we're SBA. They think we are, oh, hold on, guys. There we go. Sorry, little malfunction there. So what is the SBDC? So we are an SBA resource partner. We're your federal and state tax dollars at work. So basically there's no cost to work with us. You've already paid for the services. What I will mention in that is that since it's quote unquote free can be hard to sell. So I think people sometimes just think, well, what's the catch here? And there really is no catch. Basically, we offer, customized assistance with starting a new business. You may want to grow and expand your current business. And we're here for every step of the way, basically. And we can help with anything from accounting to marketing to international trade. We've done a lot of work recently, unfortunately, with disaster resources. So we played a pretty big role in helping to get some of the disaster EIDL money out to folks, helping with applications and things like that as a result of the LA wildfires. I'm based in LA. We have 7 centers in our network throughout LA, Ventura, and Santa Barbara County. These are our 7 centers right here. Basically, if you want to work with us is again, no cost. However, we do require you to formally register with the program. It takes about 5 minutes. Again, it's all done virtually. We just capture some information that our partners want us to collect, and then we go from there. There's also, I think one of the things we do best and most tangible, and certainly for the sake of this presentation, is capital. So, however, we're not a direct lender. So I think Daniel mentioned that too. Like SBA is not a direct lender. They back loans. We are not a direct lender, but we know a lot of lenders. We work with Accessity. We work with BMO all the time, and we also have other lenders that we work with because we're kind of a matchmaker, if you will, for folks. So a couple of things. We're not a direct lender. We always encourage folks to reach out to their current lender. If you have a business banking relationship, the first thing we always tell people if they're looking for capital, have you spoken to your current bank? It's always, that to me is the best practice. We also do non-SBA loans. So a lot of times people approach me and they think we only help folks with an SBA loan. That's not the case. We help with all types of capital. Again, we're kind of a broker. We kind of function like a broker, although we don't take a fee, we don't charge a point, anything like that. Because we can't, because that's against our grant. But basically what we can do is help package the loan for you. We can help shop the loan for you, get your documents together. But if you're not loan ready, that's okay too. We'll still work with you to hopefully get you to that next level. Again, we work with all types of lending institutions, And our goal really is to match you with the right lender for you and your business. And we also don't want to bring clients to banks that if the bank doesn't want to work with restaurants, like we know not to take you to a bank that doesn't fund restaurants. So that's kind of one of the other values we provide. And as Maria mentioned, maybe you don't even need a loan. Like we kind of help you work through that process. Maybe you're doing fine. Maybe you don't even know if you're in revenue or not. Those are things we assess as well. Maybe you're losing money. Maybe you don't know where you are. So we kind of first do an assessment that way and then kind of walk you through the next step. So what do lenders look for? You heard a lot from Maria and Daniel already. The loan repayment ability to me is one of the first things that jumps out. If you can't demonstrate that you'll be able to repay a loan, you're not going to get a loan. So I think you heard about mattress money. We do get a lot of that. We get a lot of folks that come to us and they say, well, I made $50,000 last year, but I only reported 20,000 on my taxes. Those are the kind of things that are going to prohibit you from getting capital. So keep that in mind. We don't judge, but that's definitely something that we see pretty often. A lot of times folks come to us wanting to start a business and they'll say, I want to start a restaurant. But they've never worked in a restaurant. They love restaurants, they tell me, but they've never worked in a restaurant. They've never operated a restaurant. So we always kind of make sure, and this is what a lender would say too, like, do you know the business? Do you have the ability? Can you demonstrate that ability? For startups and expansion, same thing. You've got to know the business. You've got to demonstrate that. We will help you with, if you do know the business, we can help you with projections. We have some tools that we can help you kind of see, like, you want to open the restaurant in this location. What would that cost? What revenue would you need to generate to be in revenue? Those kind of things. There's things we do all the time for folks. Obviously, you heard it. One of the collateral is important, credit's important, and usually, yes, skin in the game. You heard that too. That's something the lender is going to ask for all the time. We also help folks with venture capital. So basically, we'll just kind of look and see if your business is viable. Is the idea viable? Do the VC folks we know, would they be interested in this kind of technology or product? And so we kind of go through that whole thing with you. We go through the business model with you. This is a very competitive thing, venture capital. People come to us a lot of the time and we help with decks and all those kind of things. It's not easy to get venture capital, but that's not to say we don't do our best to help you with that. But we do have a couple folks that understand, how to get venture capital and at least get you in position. I also get asked a lot about Shark Tank. We have had one business go on Shark Tank and get funded. A company called Buttercloth, a clothing company, and so that was pretty neat. We did help them with that whole presentation, and they ended up getting funded. We also do a lot of pitch decks for folks. Oftentimes they'll just come to us with a pitch deck already. We'll take a look at it. We'll kind of help them massage it. Maybe we'll, kind of try to take it to another level before we take it out again with them. And we also have folks we can match you with, that investors that maybe would be interested in looking at pitch decks that we bring them. So again, we're kind of a middle person for a lot of this stuff. And that's a value we bring. But again, I want to mention, it's not just capital that we do. We do everything. So a lot of times people need help with licensing to start a business or permits. We're there for that. We help with, we do a lot of training as well. So especially around some of the disaster things, all those resources out there, we were doing training 3 days a week, just helping people navigate through all the different resources in the marketplace. Grants. We get asked about grants all the time. One misconception is that there are always grants out there to start businesses, and everybody's got a grant and it's easy to get. That's not really the case. I probably get asked about grants at least 5 times a day by somebody. Right now, there is one grant, and this is very specific for folks that were located and affected by the recent fires and the closure of PCH. So if you want information about the Malibu Topanga Business Interruption Fund through LA County, you can find it right here. I'm sure that, sometimes corporations will have grants and those kind of things, and we try to get that information out to our contact list whenever we receive it. But right now, there's no state grant. There has been some in the past, but right now there's no grants that I'm aware of. Anybody knows anything, sure, put it in the chat and get the info out to the people. We do partner with LISC and Verizon. Their grant just closed a couple of days ago. That was the last grant I knew about. So again, I would always tell people grants are great, but just make sure you're also mining the store. Make sure your business is doing well. We do see sometimes people just search for grants all the time, and we want to make sure they're also focusing on their business as well. So that being said, this is where you can find us. Our website, you can sign up here. You can get info about training opportunities, how to get a one-on-one session. Again, one thing, we do require you to register, and you are required to answer a few questions. Takes about 5 minutes to work with us. You can also call this number. Our centers are located all around the country, but for LA, we're LA, Ventura, and Santa Barbara County, and you can find us all right here. If you're in California and you're not in LA, Ventura, or Santa Barbara County, there is information I'll put in the chat at californiasbdc.org. And with that, I see Suzanne is back. Hi, Suzanne.
Hi. Thank you so much. That was such an informative presentation. I have a couple questions from the chat, and then if people want to put in questions for any of our panelists today, feel free to do so. Somebody asked about, does the SBDC do QuickBook classes about QuickBooks or help you review your QuickBooks?
So we do. QuickBooks is one of the tools people use for accounting. We're agnostic, so we definitely can help with QuickBooks. We can help with folks that don't even have like a formal process. For accounting, we can try to help them build something that works for them. We haven't really done a QuickBooks training in a while, so we kind of just like to see what people have first. But yeah, that's something we can definitely help with.
Okay, great. And then are people able to meet with you directly if they'd like to, or do they mostly meet with like mentors, or how does that work?
Yeah, so I'm not really the person you would meet with. We have a team we have an Access to Capital team that works on behalf of the entire network. We also have folks at the service centers that folks would meet with. Yeah, you wouldn't want to meet with me. I'm not the person. I'm more of just the voice of the whole thing. So yeah.
You're getting lots of compliments in the chat, so I think
funny.
people are wondering. So another question, does the SBDC assist businesses with applying for RFPs for state or county contracts?
Yes, I did. That's a great question. We do also offer assistance with procurement. We have a program whereby we also help folks actually apply for the contracts themselves. So we don't do a ton of helping folks certify to become contract ready. We're more about helping people apply for the actual contract itself.
Okay, perfect. And then another question for you, Ted. Do you help in mentor and business acquisitions? We had a couple of questions about acquisitions in the chat. Do you help with that?
It would depend. It's a great question. We certainly will help people if they're looking to purchase a business. There are brokerages that do that kind of work. That's not probably the meat and potatoes of what we do, but we'll certainly take a look at something and let people hopefully make an informed decision. We can crunch some numbers and do some projections and things like that. But we can't give advice in certain, something like that. That one can be a little tricky. It would kind of be up to the person, but we can definitely, help paint a picture of, what the numbers look like.
Okay, great. And then someone asked, like where they find out about more information for the contracts program. Is that at all SBDCs or?
Yes.
Okay.
So the best place would be right here. I'll also put my.
You can put it in
I'll
the
put it in the
chat.
chat. Yeah, absolutely.
And then another question, I think it came during Daniel's presentation. How do you check your business credit score?
I think Daniel's, the annual creditreport.com. You can do that once a year. I see Daniel's back.
Is that personal or how do you check your business credit score? Or can you check it there too?
Yeah, so your business one is actually, it's a paid subscription, and it's through the small business service scoring function through FICO. So let me see if I can put it in the chat if folks are interested in finding out about that.
Okay, great. And then a couple people, and maybe you can send me, Daniel, a lot of people were asking about if you could, if there's somewhere where they can look where they can see all the different rates that you are quoting. So I know I think it's in the presentation, but I don't know if there's like a one sheet I could send out to the group, or maybe your website is the best place to go to see those interest rates that you are quoting.
Yeah, so the interest rates change daily. So the best possible way to find the most current rates to go on our website, and it'll give you that information. But typically, from a lending institution perspective, it's prime plus a case by case scenario based on the business, right? What type of business it is, things of that sort. So, let's say, and from what I saw this morning, 7.75 all the way up to like 14.75, without any concessions or discounts from the bank. So, just give you an idea. But for updated rates, just go to our website.
Okay, great. And then someone asked, for those, and anyone can answer, for those who don't have Social Security, what can they do to open a business even if they don't have an income or job?
I mean, that's a great.
Yeah.
Oh,
No, go ahead, Daniel. Yeah, please.
No, I was just gonna say, you heard from Maria and the Accessity team, and then from BMO as well. So we do help clients with ITINs, right? So we do have that flexibility to help support clients that just have an ITIN. And I think one of the requirements, right, Susan or Christine, correct me if I'm wrong, as long as they have their startup business plan and everything you guys need to help them, they'll be able to guide you through that process. From the bank's perspective, we do require that the business has been in operation for at least 2 years to help ITIN customers. So I would refer you over to Accessity.
Perfect. And then someone says, if part of what I want to do is hire employees, will that help or hurt my loan possibilities? That's probably not an easy answer, but maybe you can address that, Daniel.
So, that's really tied back to a line of credit, right? Typically, uses for a line of credit is working capital and payroll. So those are some of the things we'd consider, right? So we'll take a look at your existing cash flow to see if we're able to support you to get you that line of credit that you need to start hiring employees.
Great. And then lastly, before we log off, and I'll share a slide too, does lots of interest in lines of credit. Does BMO require collateral for a line of credit?
No. So a line of credit is unsecured.
Unsecured. Okay, perfect.
Unsecured lines of credit, yeah. Up to 100,000. Anything above 100,000, it's going to be dependent on the type of business, right? So it's not a one size fits all. So it's a case by case scenario. So if your business does have a building, right, that they want to use for collateral, potentially we'll take a look at collateralizing that piece of property on the business side.
Okay, thank you so much. Well, as we approach 11 o'clock, I just wanted to thank everyone for attending this webinar. It's just so great that you're investing in your business by gaining the education to make the best financing decisions for your business. I especially wanted to thank BMO for their wonderful sponsorship of this webinar, as well as the LA SBDC, just for providing such great information and being a really wonderful resource in the community. So just a reminder, I will send out the resources, the slides, and the recording after the webinar. You can reply to that email. Let us know what you thought. Let us know what types of webinars you would like to see, what topics you're interested in. Seems like lines of credit is a big interest. So if there's something that you'd like to see from Accessity or any of the partners here, please let us know and I'll get that information to the appropriate person. And then you can contact Accessity at accessity.org. Please follow us on social media to keep up with everything that we're doing, including our events and webinars at Accessity.org on Facebook and Instagram. But I wanted to thank everyone for attending. I hope you have a wonderful day. Thank you again to our partners and have a good one. Thank you.